Hello again, this is Alex with MasterChartsTrading.com, and this is a market recap for Friday, February 9, 2018. So pretty straightforward. We're going to have stocks, bonds, several trade examples. We'll look at dollar, the bonds, commodities, gold, oil, natural gas, and we'll finish off with crypto review. I forgot it last time, so I do apologize about it. So let's dive into stocks right away. Right, let's start with stocks. Here is E-mini futures for S&P 500, symbol ES. One exclamation point on trading view. You can see here the dominant feature of this chart is this fresh all-time highs that occurred just a few weeks ago. Since then we had pretty significant selling, which brought the prices down to the red line, which is around currently 2528. We almost touched it on Friday, came down to it. These lines are programmed in. These are my indicators I programmed for MasterChartsTrading.com, and if you're interested, send me a note or sign up at MasterChartsTrading and I can share these indicators with you on TradingView. Very simple, and I'll explain everything. So once again, this is a bullish chart, and the reason why it's bullish is because we have fresh all-time highs. We had so far closed above sometime in the past, above the blue line, sometime in the past. I don't know where it was. It was like a year ago or so. Let me go. Okay, so here's that close above the blue line that happened on the March of 2016. And since then, basically, I would consider the market in a bull phase until we get a close at least below the red line, but probably best if we get a close below the yellow line. So currently we're kind of approaching this red line, but we're still, ways off from the close below the yellow line. We're approaching it, so it is concerning, and it's possible that we will unravel into a bear market and we will start making new lows, etc. It is always a possibility of that. How likely is that scenario? It's becoming more and more likely. However, the bounce, I think, is going to materialize at the very least to relieve a strongly oversold conditions. So let me show you what I mean by deeply oversold conditions. Here is New York Stock Exchange Composite NYSE. It's graphed right here. Up here in the upper pane of the chart we have stocks above the 20-day exponential moving average and stocks above 50-day exponential moving average. So notice that currently on February 2018, February 10, 2018, we have both of these averages, or both of these numbers are actually below 20. This one is below 10 even. So this is a deeply oversold value. If we continue to assume that stocks are in a bull market, and I don't have enough evidence to support the opposite. There are some issues with the market. For example, junk debt has gone down. There is also utilities and real estate that are underperforming. But overall, there is enough stocks and enough buying power still within the market for me to say that we're still in a bull market. So I'm going to say that this condition that we're having right now is indeed a deeply oversold condition, while the bull market is still intact. At the very least, I want to see a close below this red line. And additionally, I want to see more market breadth deterioration. And here is, for example, New York Stock Exchange Composite. The longer term average for the percentage of stocks above the 200-day and the bullish percent index, it's not great. It's around 47, almost 50% or so, but it's still decent. So long term, I still think that we're in a bull market. And here's another oversold reading, and this is a breadth momentum oscillator. You can find it on stock chart. It's called ITBMRX RANYA, intermediate term breadth momentum oscillator. So various oscillators were obviously oversold. Various percentage of stocks above certain average 20 and the 50 were obviously oversold. I don't use indicators as far as momentum goes. Like for example, RSI. Well, here is let me see, where is RSI? We can put an RSI on it, and yes, it will definitely show us an oversold condition. Does it mean anything? No, because oversold conditions could continue indefinitely. So for example, here is RSI on the bottom pane here, bottom part here. I'm gonna make it nice and big. I'm gonna close this and close this. So here is RSI. Yeah, it's definitely oversold. You know, we touched 30 level here for mini futures here, ES mini futures. So yeah, but you know, I don't really use momentum oscillators in general because they all show the same picture, and I can just look at the price, and the price is telling me right now that we're definitely oversold. So this to me looks like a hammer candlestick. As a matter of fact, I went ahead and I opened a Dow Jones position on Friday. I opened Dow Jones on Friday at 243.49 right before the close, and then the very like last minute of the trading, it's sold off. So notice that I basically was trying to open a position above this blue line, but because the stock sold off at the very last moment, it turned out that I did open the position above the blue line, but at the end of the day, we saw some selling, and my position is slightly losing right now. But my target is really quite close. My target is only $5. Why is it $5? Here's why. Because basically I set a target of one average true range, which is in this case $5. Average true range, ATR, right there. You can apply the indicator by clicking here, and then you can search for it, or you can just, for example, here's average true range. So that's my target, 1 ATR, and I think that it is a reasonable target. So we'll see if it goes. My stop is basically a trend change. So a trend change would be a close below this yellow line, and I don't see it yet. So overall, I still think that the market is bullish. It's definitely oversold. So let's continue to. Sorry about that. Somebody called me. All right. So market is deeply oversold. Now there are several sectors that are also they're not really oversold per se. For example, here's utilities. They are outright bearish. Now if you are really hell-bent on shorting stocks, you could short utilities. You could use options, or I think there is also an inverse ETF, although the volume is really low. Additionally, if you really want to short utilities, then you have to, there's a lot of dividend distribution that needs to be taken into account. So it's not an ideal security to short. So here's XLU, but in any case, at the very least, I would avoid it, and this is what I sent to my subscribers. As early as the 10th of January of this year, I was already, even earlier, I was already cautioning them about this stock fund, and then finally we broke down below this yellow line on the February of this year on the 2nd, and then we continue lower. So I would basically avoid utilities for now. And if you really want to short it, you could short it at the yellow line, for example, currently at $49, or you can short it at the red line at around $51. So, I mean, I personally would short it at $51 if I was really trading this on the downside. Here's real estate. And also same thing, where basically we saw a bearish break right there basically. And from then on, I would say that's it. I don't want to be buying this fund. I want to be either not owning it, basically avoiding it, or shorting it. And here were a couple of beautiful opportunities to short IYR. And this one, by contrast, you can short via a retail ETF. And here's DRV, so you could have had a very nice gain already in inverse ETF. Yeah, so this is looking pretty good as far as selling. I would not be buying this really anytime soon. So we got utilities, PGX, which is also preferred stock. Same thing. I'm avoiding it. I'm cautioning against it. I sent an alert to avoid it as early as 25th of January, and hopefully the subscribers are avoiding it. This week, Friday, XLP consumer staples came really close to entering a bear market. Notice how nice this indicators work sometimes. Notice where the price landed on the 6th of February, and then notice big rally afterwards and another selling exactly at the red line. So I was worried that we're going to close below this yellow line, but looks like we rallied by day's end. So far I think XLP is still mildly bullish, and I would look to probably enter on the long side. Okay, so let me see what else I wanted to cover. And then of course junk bonds. So here are junk bonds, same thing. I was starting to worry as early as December of last year. I didn't like this action here on the 19th of December. I thought we reversed back into the bull market back on the 4th of January. No, we came back, touched this blue line from the bottom, and then unraveled. Not support break here on the 30th and a major support break on the 2nd of February of this year, followed by a very significant plunge for a junk bond ETF. TLT, this is my position. Here is TLT on a daily time frame. I actually had a position, I had a position here. I entered December 14th. I thought we were gonna go higher from here. Obviously, I was wrong. I closed my position here on February 2nd. Notice that how it touched this red line, continued lower, and now we're definitely in a bear market. I would not want to be buying this fund. For example, here's TYX, and this is a 30-year Treasury yield on the United States Treasury bond. Here we have on the 1st of December, February of 2018, we basically have a breakout in rates, and this could be a monumental event. This could continue further, and we could see different shocks to the market basically because the interest rates are going higher. So already we're seeing interest rate sensitive groups like IYR, the real estate, XLU, utilities, PGX, like I already said, preferred portfolio, and of course junk bonds, investment grade bonds. Notice how LQD, investment grade corporates, really sold off hard. And of course the most important fund I think is TLT, and it is definitely currently bearish, which is depending how you look at it, could be viewed as a good thing for stocks because money is rotating away from bonds. But we don't exactly know how investors are going to react to the future rise in interest rates. So we'll need to play it by the ear. So far, once again, I still think that the stocks, Dow Jones, S&P, QQQ, they're still bullish until we get a close below one of the red or the yellow line at the very least. Alright, I wanted to show some of the trades that I have currently open. So here's Twitter. So I wanted to kind of go over this trade. Okay, so what happened here is the following. I entered on the 5th of December at $20.62, and I sent an alert to my subscribers, obviously. The position went in my favor. I sold one half of my position just a few days later on the 11th of December because I wasn't sure if it's going to go, obviously higher or lower, and I don't want to find out, if I don't want to have a loser on my hand, basically. So I went ahead and I sold half, moved my stop to entry, and then the position went even further in my favor, and it continued further. Another alert sent to my subscribers on the 18th of January also resulted in a nice gain. Twitter popped this Thursday on earnings, positive earnings surprise. So Twitter looks great. I would continue holding it if you have enough equity and potentially open new longs. It just depends on where. Another position I just opened myself, and that is ACPRX. Again, I know nothing about this company. I know it's a pharmaceutical company. I know it's a high volatility company. So I entered at $3.30 here on the 2nd of February, and my limit sell is one average true range, one ATR. There's where my mouse is hovering on the left, ATR. And this is in purple right here. So it's 17 cents away while I have a 19 cents target. It's a tight target, but this is a volatile stock. Notice that my stop is also quite tight for this stock. We'll see if it goes anywhere. Failure is always an option, don't forget that. First Solar, I just closed it. It actually got stopped. I have a whole bunch of positions got stopped out. So I entered initially back on the 25th of September 2017 at 47.44. Had several exits along the way. One at on the 26th of October, and then another one on the 4th of December, and finally I closed my position here on the 5th of February 2018 at an overall profit of 17.48%. Now, again, this will depend on your personal style of trading. Some people like to take profits, some people don't like to take profits. I prefer to take profits relatively quickly. This way I can relax and enjoy my life instead of worrying about the position. Okay, so another trade. IBM, I have it still open, and this one I am not sure where is it gonna go. I entered on breakout at 168.57 on the 17th of January. I was very hopeful because this breakout seems to be legit, but now I'm not so sure anymore. Especially on Friday, I was quite worried that we're going to close below this yellow line, and that's it. This is my hard stop. So if I see a close below this yellow line, then I will concede defeat and I will exit this position. For now, I'm still hopeful. Maybe can come back up. It's possible. Okay, let's continue to the Forex universe. Here is DXY dollar index on a daily time frame. These indicators again are available at MasterChartsTrading.com. And just sign up for them. So here we have a couple of, well, 3 red arrows, down pointing arrows, and again, notice where I would have put my stop. above this blue line. So if I was shorting this security, then I would put my stop above this blue line, and actually all three of these potential positions could have worked in your favor. Dollar is approaching this yellow line. I think this is where the short sellers will start attempting to sell. Even bigger target, of course, would be to sell at 93.62. Maybe we will even get there, but maybe we won't even get there. So here's euro versus US dollar. Also kind of trying to attempt to bottom around this green line. Yeah, we could come back maybe to the blue lines. Here's, for example, British pound. Notice that it already broke below this green line and found resistance now there. See, you got 4 days of selling at this green line. So I think we may see a slightly deeper bounce for the dollar. So here's Canadian dollar, same thing. I would potentially look to short it already. This looks pretty good. This particular pair, US dollar versus Canadian dollar. US dollar versus Japanese yen, USDJPY. Notice very nice, easy trading opportunity right there. Sell at the green line, the red line rather. Short or sell at the red line. You'd have already a very nice gain right there. So again, overall, I think dollar is bearish, but maybe we'll see a further bounce for the dollar before the shorts come in again. Okay, let's look at gold. Here is XAU versus USD, also known as gold on Forex. Bullish chart, trying to bottom here. We'll see if it does. Here's action in gold miners, rather junior gold miners, GDXJ. I don't like this action. Notice the break below this yellow line and continuation lower. Here is GDX on the daily time frame. Really bizarre looking candle, but this is definitely a hammer candlestick. Let me just show it to you. It's like a dodgy hammer, but it's definitely a hammer. And notice the close is above this yellow line, so perhaps we're going to hold it. We'll see. If it holds here, this could be a killer buying opportunity. If it doesn't hold here, then gold could correct further together with the gold miners. Okay, what's next? Okay, oil. So, CL1 exclamation point. Excuse me. So here are oil futures on a daily time frame. Basically, this is a bullish chart. Normal pullback from fresh highs. We're getting to this blue line, and I think this blue line currently around 57.43 would be just an excellent buying opportunity, especially if we see like bottoming pattern here, and then we rally from, and hopefully we'll rally from there. Energy XLE is a bit underperforming. Notice I had a position here. I entered on the 21st of December, took a lot of profits along the way, and finally closed the position at an overall 5.2% profit. Notice that afterwards it continued lower, and I'm a little bit concerned about this, but again, we're trying to bottom here at the yellow line too. So hopefully this will, this will be as low as it's gonna go. Natural gas futures, NG1 exclamation point, very wild action. Notice that a short here would have worked on the 29th of December, a long entry on the 12th of January would have also worked quite nicely. Here, what I think is happening, we have a reversal into a bear market again. It's really a really volatile security. So on the 1st of February of this year, I see a close below this red line. So this could be again a change for the bear market. So so I'm gonna say that this is a bearish break. And then notice that we continued lower. So now if I was trading natural gas, I would look to short it on a bounce to $2.71 if you are aggressive. If you are more conservative, excellent selling opportunity would be around $2.49 or $3. Finally, crypto review. So let's look at Bitcoin, America's favorite Bitcoin. On Bitfinex, and again, it's an instrument. So Bitcoin is an instrument to be traded, not to think of as an investment. Or some people like to think of it as an investment. I look at it purely as a trading instrument. So here's Bitcoin versus US dollar in a daily time frame with my indicators on it. You can find MasterChartsTrading.com indicators on TradingView. Notice that buying opportunities here at the green line throughout November, December. Then we had buying opportunities here at the blue line for Bitcoin in December. Then we had a break below this blue line, but I would still consider it mildly bullish in this area. So between January, maybe even earlier, maybe between 30th of December and 4th of February 2018, it was sort of indecisive. More indecisive from the 16th of January till February 4th. Now finally we have what I think is a new bear market in Bitcoin, which I believe started on February 4th, 2018. It is marked with a down red arrow right there. Now if I was trading Bitcoin, I don't trade Bitcoin currently, I would short it currently on the 10th of February 2018. I would short it with a hope of it moving towards like 4,800 from here. Litecoin, same general principle. Basically, we have a break below this red line on the 30th of January, right there. You can simply short it right on the break. And if you did short it on the break, and by the way, I didn't mention this in one of the previous videos, you could have had a nice gain already. Ripple, XRP, XRP USD. Let me see. Let me find a better. There it is. So Ripple, same thing. We had a bearish break as early as the 16th of January of this year, and then you can look for shorting opportunities. And finally, Ethereum. And well, yeah, actually this is good. Ethereum right there on a daily time frame again. Basically, still mildly bullish, but I don't see why one cryptocurrency would be better than another cryptocurrency, and especially if Bitcoin, the main cryptocurrency, is in a bear market, then I don't see this one being in a bull market. Notice that Ethereum is already finding resistance, possible resistance here at the blue line. Although this one is the most bullish of the cryptos, I would be wary of, strongly buying it. I would probably want to avoid it or potentially short it, especially the Bitcoin. Bitcoin is looks very good to short right this instant. Okay, if you have any questions, please send them in to MasterChartsTrading.com. Thanks for watching and have another great trading week. Bye bye.